If you're thinking about buying Bitcoin or any other cryptocurrency, there's a few things you need to know first. My name is Adam Nelson, and I'm a software engineer. I've been using and learning about cryptocurrencies since about 2015. And that's admittedly not very long, but cryptocurrency is not very old. The first thing you need to know about cryptocurrencies is that not all coins or different currencies are made equally. For example, there's plenty of tokens or coins out there that were created simply to make the creators a lot of money. There's something called an initial coin offering where the coin launches and a lot of people buy into it, and the seller may have saved a lot of the coins for themselves, and maybe they sell immediately when it peaks, and then the coin just crashes and dies. This has happened to many different cryptocurrencies, but you don't really hear about those altcoins because they're not Bitcoin or Ethereum or Doge. So speaking of Dogecoin, it was actually created as a joke. Its creator never in his wildest dreams thought that it would reach 8 cents per coin, and yet it has. Something you should know about Dogecoin is that there is a limitless supply of the coin. In 2015, there were 100 billion coins, and every year after that, there are 5 billion new coins introduced into circulation. And this differs from the US dollar because, unlike the US dollar, we know exactly how much Dogecoin is going to be introduced every single year. With the US dollar, as soon as government decides it, they could print as much money as they wanted to. And this can lead to inflation, or in other words, the US dollar can decrease in value significantly as we print more and more. So in this way, in terms of scarcity, I would say that Dogecoin is actually better than the US dollar, which is crazy because it was just created as a joke. And I'm sure you've already heard of Bitcoin because it is the most popular cryptocurrency ever. And the reason that is because it was the first. However, that doesn't mean that Bitcoin is not without its flaws. You should really know about the 51% attack, for example. I won't be discussing blockchain or the other technologies that back some of these cryptocurrencies because there's plenty of videos out there that describe them already. You should also know that there are hundreds of cryptocurrencies out there. There's Monero, Ripple, Library, Dash, Litecoin, Ethereum, which we'll talk about in a second, and hundreds of others. And so you really need to know the differences between each one because they weren't all created for the same purposes. And I would contend that it's important to know why a coin was created and what purpose it fulfills before you invest in it, because it might be worth more or less. For example, maybe Dogecoin is worth a little bit less because it was just created as a joke, whereas maybe Bitcoin is worth a bit more because it's so popular, or maybe Ethereum because it serves a totally different purpose from Bitcoin. Another thing you should know about Bitcoin specifically is that with time, it gets harder and harder for miners to produce more. The other thing to understand about Bitcoin is that there is a very hard limit as to the number of Bitcoin that can ever be mined. I believe it's 21 million, but don't quote me on that. Anyway, what this means is that once we find the very last Bitcoin, there's no more ever going to be introduced into circulation. And what that can do is really drive up the price of Bitcoin if it's still popular. Now, another really popular cryptocurrency today is Ethereum. And technically the currency is called Ether and the technology is called Ethereum, but that doesn't really matter. Everyone just calls it Ethereum. And I'm going to read real quick what Ethereum was built for. So Ethereum was built more as a utility than a currency. It's a way for various entities to store smart contracts using blockchain technology, which means companies and people can create digital ledgers that are guaranteed to never change, as miners all around the world are verifying that they all saw the same terms in a given contract. So Ethereum was built as a tool to store smart contracts, whereas Bitcoin was created more as a store of value or as just a currency. So the thing you should know about Ethereum is that developers can create a lot of new technologies based on the underlying Ethereum technology. And developers are really only limited by their creativity. And so I think that this is one thing that affects the value of Ethereum. In fact, Ethereum is the second biggest cryptocurrency in the world, right after Bitcoin, in terms of market capitalization, which is basically the total value of the coin. So if you've learned anything so far in this video that you didn't know before, or if I've piqued your curiosity about certain other cryptocurrencies, go ahead and hit that like button below. It really helps me out. And stick with me just for a few more minutes while I go over some very important additional points about cryptocurrency that you need to know before you invest in it. There is a ton of hype surrounding cryptocurrency. And from my experience looking at cryptocurrency since about 2015, I've seen it come in waves. And the waves seem to be getting bigger and bigger every time. If you go and look at the price of Bitcoin over time, you'll see that it jumped up to $20,000 around the end of 2017 and then fell back down to $4,000 at its lowest. I don't remember exactly when. And then recently in 2021, it's jumped up to more than $52,000. And if you ask me, those prices in the cryptocurrencies correspond one-to-one with the general interest in cryptocurrencies and with the number of times you hear about it in the media. For example, whenever Elon Musk tweets about Dogecoin or Bitcoin, those values spike significantly. And when PayPal announced its latest support for Bitcoin, the price really skyrocketed. And I say support for Bitcoin like that because really all you can do is buy and hold and then sell Bitcoin in PayPal. You can't actually go buy anything with a Bitcoin, and you can't transfer it out to an external wallet or anything. In my opinion, you can't really use it as it was intended if you buy it on PayPal, which I think is kind of ridiculous. So personally, I would never buy into these cryptocurrencies at their all-time high values, simply because I've seen them hit all-time highs before, and then I've seen them drop significantly. And I think maybe that's going to happen again. I can't tell you what's going to happen, obviously, and I won't tell you whether you should invest in cryptocurrencies or not. But I'm hesitant to buy a lot of cryptocurrencies right now at their all-time highs in 2021. So if you're still thinking about buying cryptocurrency right now, just make sure you're doing it for the right reason. But if you're just getting the cryptocurrency because you're afraid of missing out, then I would say it's definitely not the time to buy into cryptocurrency. There are all sorts of stories of people selling their mortgages and putting all that money into Bitcoin when it hit $20,000 near the end of 2017. And then I imagine they lost a ton of money as they got discouraged when it dropped down to $4,000. And so the same thing may happen now that it's hit, I think, $52,000 or so. It may drop significantly, probably not down to the $4,000 range, but still. However, if you're convinced that the value is going to continue to rise, then by all means, go ahead and invest in cryptocurrency. And of course, the past isn't indicative of the future. We can't use the price charts in the past to predict what's actually going to happen. So I don't actually know, obviously, but I have a hunch. And maybe you should really consider buying Bitcoin or any other cryptocurrency when you're not hearing about it in the media or online a lot. If you go and search YouTube right now, you'll find a ton of new videos about cryptocurrencies because it is so popular right now and it is just skyrocketing in value. And maybe that's the exact thing that should tell you not to buy into it right now. So if you're still thinking about getting into cryptocurrencies, I would suggest that you use a technique called dollar cost averaging. And that's just a fancy way of saying budget out a certain amount of money that you want to put towards it every so often. For example, maybe you want to buy $100 worth of Bitcoin every first of the month. In this way, as the price of Bitcoin increases, sometimes you'll get a little less Bitcoin, and as it falls, sometimes you'll get a little more Bitcoin for your $100. And this really helps mitigate the risk of the volatility of cryptocurrency. And if there's one thing that cryptocurrency is, it's volatile. And you can actually set this up today. There's a website called Coinbase.com, and there's a link down in the description below. If you buy $100 of Bitcoin or other cryptocurrencies, that actually sends a little bit of money my way and helps me out as well. Unlike buying stocks, which are backed by actual companies, cryptocurrency generally, looking at you, Ripple, is not. Sentiment plays a huge role in the actual value of cryptocurrency, to a greater extent than stocks, in my opinion. Another thing you need to be especially aware of is something called pump and dump. If you've never heard this expression before, do not buy cryptocurrency yet. Go learn what it is. You can actually pause this video right now. You don't even have to finish watching the video. It's that important. Because this is something that happens all the time with cryptocurrency. Cryptocurrency is kind of like the wild, wild west still. And so people do things that are pretty sketchy and that can really get you to lose a lot of money. So go learn what that is and then come back and finish this video. Personally, I wouldn't put a penny into cryptocurrencies without understanding this concept. Because unless you know what it is, it can be hard to tell when others are doing it, and you might get trapped and you might lose a ton of money. Looking at you, GME Diamond Hands. And so I guess my main point is don't get caught up in the hype and don't YOLO away your mortgage just because you think you can get rich really quick. You probably won't. Another point I wanted to make about cryptocurrency is that cryptocurrency is basically based on code. It wouldn't exist if a developer didn't write code to support cryptocurrency. And as a software engineer, if there's one thing that I know about software, it's that it's never permanent. It's always going to change. And this change can lead to things called hard forks. This is basically where one group of developers say, hey, I think we should add this feature to this cryptocurrency. And another group of developers say, well, I don't think so. I think we should stay with this feature or add this other feature instead. And so each of those groups of developers can go off and create their own versions of the main cryptocurrency. And this is called a hard fork. They're creating a brand new cryptocurrency based on the same technology and the same principles as another cryptocurrency. And this is something that's actually happened multiple times before with Bitcoin as well. This is how we have things like Bitcoin Gold and Bitcoin Cash. This point is really important because the same rules that say that we only get 5 billion new Dogecoin per year added to the circulation could change. If the developers really wanted to, they could say, okay, now we're going to get 100 billion new coins per year. Or the developers could say, actually, we're going to stop issuing new Dogecoin and we're just going to see what that does to the value of the Dogecoin that already exists. Now, I don't think that's necessarily likely, but it could happen. And so, in my opinion, this just adds to the risk factor and to the instability of cryptocurrency in general. Now, I'm not opposed to cryptocurrency personally, but this is just something to know and something to consider. You should also know that there are numerous instances where people have lost cryptocurrency because of hackers or people forgetting their passwords or people's family members dying and they were the only ones with the passwords, or they threw away a hard drive with millions and millions of dollars worth of Bitcoin on it. This has happened over and over again, and it's a problem not easily solved. This actually happened to me. I had part of my cryptocurrency on a certain website, and that website got hacked and lost tens of millions of dollars, and with it was my cryptocurrency. And this leads into the topic of holding your own cryptocurrency versus letting someone else hold it for you, such as Coinbase or PayPal or any online exchange or any other cryptocurrency services that you may be aware of online. If you're not holding the private keys to the wallet that's holding all of your cryptocurrency, you don't technically own that cryptocurrency. Somebody else does. And if they ever get hacked, your cryptocurrency is at risk. And so that's why I would recommend that you get something like this. This is a hardware wallet called Trezor. There's many others on the market, but basically it allows me to own the private keys and it allows me to store my cryptocurrency safely. There is one gotcha though. You can never forget your PIN or your password, and you shouldn't let others get a hold of those things because then they can just come and take your money if they have access to the actual device as well. And the final thing I think you should know about before you invest in cryptocurrency is the same thing I would tell anyone who's looking to invest in any stocks. Don't put any money into cryptocurrency that you're not willing to lose. Don't put your entire mortgage in there. Don't put your entire life savings into cryptocurrency. Trying to get rich quick can really hurt you. And honestly, putting a lot of money into cryptocurrency and then trying to day trade it is probably going to lose you more money than it actually earns you. I'm not saying don't play that game because I have, and I've won and lost, but I would say don't play that game without understanding the risks. Just like day trading stocks or investing only in single stocks, investing in cryptocurrency can be extremely risky. However, if you ask me, I think you can balance this risk by investing in other places as well that are much less risky. Take cash, for example. If you just have a pile of cash in your savings account, that's very low risk. That's also very low reward, but it kind of helps mitigate the risk that you have potentially if you put money into cryptocurrency. And so my point is, try to have a balanced portfolio of investments and realize that cryptocurrency is definitely on the riskier side of investments. And another thing, if you do get really lucky and you double or triple or quadruple your money, don't start to think that you can do it again. Take it for what it was, and that's luck. Just take your gains or tendies and move on. In other words, never put all of your eggs in one basket, even if everyone on Reddit says that that basket is going to the moon. Hopefully some of this information helps you decide whether you should buy into cryptocurrencies or not. Please realize that I've really only scratched the surface when it comes to cryptocurrencies, and there's a lot more to learn. So go do your own research, make your own decisions. I'm not telling you whether you should or should not buy Bitcoin. I just want you to be aware of some of the risks involved with investing in cryptocurrencies, as well as some of the differences between the different coins. You may also want to come up with your exit strategy before you actually start investing in cryptocurrency. Are you going to hold it for 1 year, 2 years, 10 years, 30? Are you going to wait until it hits X dollars above what you bought it for, or are you going to sell it when it hits Y dollars below what you bought it for? These are all things that you should consider and stick to once you have a plan. Give these things some serious thought and let me know what you decide in the comments below. I'm really curious what you think about investing in cryptocurrencies. And which one's your favorite? Do you prefer Bitcoin or Ethereum, Dogecoin, something else? Let me know. Thanks so much for watching this video. If you found it helpful, I'll include a Bitcoin address down in the comments below, and you can send me a Satoshi or 2,000 or more, whatever. I'm going to try to include that anyway. I'm not actually sure that it's allowed to put Bitcoin addresses in the comments. I've never seen that before, but I'll give it a try. Anyway, thanks so much for watching, and until next time.